Welcome back. Well, Lupin is down in trade today on the back of what was a weak Q4 performance when it came to revenues. The US and India business have been sluggish. I did speak with the management in detail on their Q4 performance and began by asking about the performance in the US market and pricing pressure. Listen in.
It was a good quarter from the standpoint of the baseline business as well as the new product launches. The only reason the revenues were a little bit below the previous quarter is because of the seasonal products, but both the anti-infectives as well as albuterol, which is a bit seasonal, was a couple of million down. But products like Suprep were very solid. Tiotropium contributed more this quarter versus the previous quarter. Darunavir certainly had competition, was the largest pricing pressure because of additional competition last quarter. But overall, the business was pretty much in line with what we had expected. And a couple of $1 million on product sales below previous quarter, but with the IP income that we had on top, it was overall above Q3.
Okay.
So I also want to say that, the effort around growing the business profitably has continued. So the profitability of the U.S. business improved quarter over quarter, which is a trend we've established over the last many quarters now.
All right. What is your view on the launch of the drug for an overactive bladder, the generic version of Myrbetriq, where the innovator has sued the company? Would it be an at-risk launch if you are considering it, considering that you have US FDA approval? Where do things stand on this particular drug and what is the opportunity?
Yeah, so we were very pleased to get the product approved and we launched and had a temporary restraining order that has, we hope temporarily discontinued the product supply. We're very optimistic that the temporary injunction will be lifted in the coming days. We believe that Astellas has obtained weak patents and is asserting them to limit generic competition. And we're very pleased to open the market to this important product to bring an affordable version of Myrbetriq to the market.
Okay. Okay. Before we get to margins, Vinita, give us a sense in terms of what we're tracking when it comes to the US sales. You've hit over $800 million for FY24. What does FY25 look like in terms of an absolute figure for the US? And this quarterly run rate of around $200 million, does that continue going into FY25? What is the upper end that we can expect?
Well, depending on what happens with Myrbetriq, there should definitely be a good upside as we potentially get the restraining order removed and get back into the market. We expect to sustain the $200+ million a quarter, and based on product launches like Myrbetriq, we've also had other product launches. We launched the Oracea generic in April. It's been a very good launch for us. Limited competition product that will contribute nicely to the quarters to come. Plus, we have additional litigation products like Slind that we expect later this calendar year, but depending on the litigation outcome there as well. And we have a couple of other ophthalmic and injectable products. And we have just launched Prolensa this past quarter that will continue to contribute to fiscal year 25, and a couple of other ophthalmic products, injectable product, Ganrelix, we just launched last quarter. We have liraglutide that we hope to be able to get approval and launch in the next fiscal year. So a good number of product opportunities, especially complex products and paragraph 4 products that we hope help us, grow the business. We expect, single-digit growth on the U.S. revenues and hopefully can do more than that based on this litigation outcomes.
Okay. Ramesh, margins have hit 20% for the second consecutive quarter. Are these margins sustainable on a quarterly run rate going into FY25?
I would imagine so. So, the buoyancy on the top line is certainly going to continue. And there's been tremendous focus on margin improvement. Even in this quarter, you would see there has been improvement insofar as the gross margins are concerned. It touched about 67.8%. The personnel costs were tad higher because of, in fact, a slightly lower sales in quarter four. But you'd also reckon that, there was a lower quantum of PLI, so this particular quarter because the cap of 200 was kind of breached. Manufacturing and other expenses are certainly on the lower side. So I would imagine once the adjacencies also start firing, which could happen, which should certainly evolve in the course of this year, you would certainly see margin expansion to happen over time. And we're fairly confident of sustaining this 20-odd percentage points during the course of the rest several quarters.
Okay. You had earlier indicated 22 to 23% would be an immediate target in terms of margins. When do you hit those levels? Are you still sticking by that guidance?
Yeah, so we are a tad lower than the competition when it comes to core margins, and I just explained that is essentially because of one is of course the kind of adjacencies that we see that we have, and there's tremendous focus on reining in the costs and focusing on in fact the right products to deliver the gross margins and the like. Whilst this continues, I see no reason why we should not be touching it at the earliest possibility.
Okay. All right. Well, Nilesh, coming to you now, India has been growing for the past couple of quarters on a steady pace. Now, this quarter, it was around an 8.5% growth. Were you happy with that growth? Because it slowed as compared to the previous quarter, and the expectations were around, 10% this quarter.
Yeah. So one, not happy with the growth. I think the market has kind of slowed down as well for the industry and certainly for us as well. For the year adjusted for one-off, we grew at 25% ahead of the market. We've talked about 30%. So, I think we're more or less there. But we certainly need to step up the growth. I think April has started strong. And we would expect growth to continue. In our lead therapies, cardiology, we grew very nicely, 35% ahead of the market. Respiratory, we actually grew 4 or 5 times ahead of the market. Diabetes has been our Achilles heel for a while. I think we're still growing a tad under the market there. But I think, it's all picking up. We'd expect to get to close to double digit and add that 30% ahead of the market soon. There's a nice bunch of products. We launched 25 products last year. I think there's a similar number of products that we will launch this year as well. So lots of stuff happening in India. Okay. But not happy with what we did in Q4. I think we can do better.
Okay. Well, I heard liraglutide, earlier, I think from Vinita. How are you approaching the GLP-1 opportunity in India as well as the global markets, Nilesh?
Being a large metabolic company, obesity is obviously a very clear part of what we need to work in as well. The link between diabetes and obesity, or now everything in obesity seems to be huge. And we're certainly working on it both from a global opportunity as well as for opportunities in India. There are obviously patents, so we're working, in line with whatever those patents would allow. But products like liraglutide, products like semaglutide are products that we would bring to market, and we would certainly work to see if there are other GLP-1s that we could, partner with and bring. That's certainly what we want to bring as well. We're certainly going to be in this space, and we would want to be in the forefront of people bringing offerings in this space.
Okay. Well, Nilesh, just leave us with a guidance for FY25. Because you said India you'd like to pick up in terms of growth, US as well, and margins should probably sustain at these levels. What is the consolidated guidance that you can provide us for this fiscal?
Well, as you know, we don't give guidances, first of all, but I think we've been inching up. We've basically been talking about double-digit growth on the top line. I think we'll get to pretty much close to 10%. For FY25 as well. Ramesh has already talked about the EBITDA margin. Clearly, in the last 3 quarters, we've shown the margin increase to that 20-odd%. We'd certainly keep it there. and hopefully inch it up a little bit. I think Ramesh didn't give you a time frame, but I think it's going to be a couple of years before we get to the 22, 23%. I think there's more top line as well as more optimization that we need to get in place. Right now, we want to firmly entrench that 20+% before we build on that. But I think we'd expect growth across the board in the US, obviously driven by products like Myrbetriq. If we can bring that back to market, we have other products as well. But India, we're growing very well in other markets like the global institution business or EMEA or the like. So so I think 24 was a year of resurgence or bouncing back. Again, I think this is a year of building on that even more.
Right, that was the management of Lupin speaking about their quarterly results. The stock down about 5%, not so much, on account of results as much as also on account of the weakness that we're seeing in the broader markets. Down about 2% for the mid-cap index, almost 1,000 points shaved away. So what we'll do is take a short break, come back on the other side. Important to get in, some market opinion, some trading strategies. Jay Thakur of ICICI Securities joins in.